Greeting friends. In this part of video, we'll continue from where we have left yesterday. We are learning lesson 2 of real estate investment trust of paper 7 module 3 corporate funding and listing in a stock exchange. Yesterday we have seen the background of REIT. We have seen that real estate investment trust is governed by SEBI Real Estate Investment Trust Regulation 2014, which was notified on 26 September 2014. It is a trust under Indian Trust Act 1882. A sponsor group, redesignated sponsor, manager and trustee. These are the parties in any REIT. There is a ceiling of the maximum number of sponsor and holding. It has been made mandatory that each sponsor should hold or propose to hold minimum 5% of units. Collectively they should hold 25% for the period not less than 3 years from the date of listing. A sponsor or a sponsor group together should hold not less than 15% units all the times. Then we have seen that 80% of the money value of REIT asset is invested in completed and revenue generating properties. Remaining 25% can be invested in developmental properties, mortgage backed securities, government securities, unutilized FCI of a project, TDR required for utilization, money instrument or its equivalent. Then we have seen that the REIT is required to carry out valuation half yearly basis. They have to declare NAV in each half and are supposed to declare the NAV within 15 days of date of valuation. They are supposed to distribute 90% of net distributable income, that is income after tax, and it should be distributed not later than 15 days of half year at least. Then they can directly invest in REIT properties or through SPVs where they have the controlling stake. We have also seen that initial offer there is a minimum size that is required to be floated, that is 250 crore. Then for initial offer, follow on offer, right, QIP, minimum subscription size has been prescribed, that is rupees 50,000 from one subscriber, and IPO not less than 25% of numbers of unit on post issue basis should be held by public. Similarly, there are some exemptions. They can bring down the public holding less than 25% if they satisfy regulation 14(2)(a). Then we have seen that trading, all REIT are compulsorily listed in a stock exchange and trading is done in lot of 100 units. Borrowing and deferred payment, there is a ceiling that 49% they both together should not exceed. Individually they cannot exceed 25% unless they have the approval of unit holder and credit rating agencies. So these are the conditions, silent features of REITs. We discuss eligibility criteria for registration. We saw that applicant is required to be the sponsor. On behalf of a trust they were supposed to apply for registration, and any REIT cannot operate unless it is registered with SEBI. A sponsor, there is a requirement that they should hold 5% minimum individually on post offer basis. Then there is a compulsion that net worth of a sponsor collectively should be 100 crore and individually not less than 20 crore. There is a requirement of experience 5 years of development of real estate fund management. Similarly, the requirement for manager has been laid down. Body corporate or company or LLP could be the manager of REIT. If manager is body corporate or company, the net worth should be minimum 10 crore rupees. If it is LLP, then again it should be 10 crore but net tangible assets. They should also have 5-year experience as required for a sponsor, but some other services have been added. There is a requirement that trustee should be registered under the SEBI Debenture Trustee Registration Act and should not be associated with sponsor, manager or valuer. Few more conditions have been laid down. So these are the things that we have learned in the last video. After this quick recap, today we'll discuss and learn the issue and allotment process of real estate investment trust. How trust float initial offer for the public and what are the process involved in it. As I told you that the offer issue and allotment में the offer is required that REIT should offer it or should allot its unit through public issue only. That has been compulsion laid down under the regulation. There are some preconditions, that is before floating a initial offer some preconditions are to be satisfied by REIT. Those are: first, no initial offer of units by REIT shall be made unless the REIT is registered with SEBI under REIT regulation. The REIT assets, the value of REIT asset owned by REIT should not be less than rupees 500 crore, including the holding in underlying SPV. If it is investing money through SPVs, having controlling a stake in it, it could be complied before allotment also. Means if suppose the REIT is not having assets of value rupees 500 crore, then before allotment they can increase their value to 500 crore and then only they can allot. The offer size, as I had discussed, should be minimum size of 250 crore rupees and minimum number of unit holder other than sponsor related party should not be less than 200. So for REIT it is mandated that the minimum number of unit holder other than sponsors, its related parties and its associate forming part of public shall not be less than 200. Thereafter some more condition has been laid down. Now for a RET raising fund through the initial offer, the units proposed to be offered to the public through such initial offer, some condition needs to be fulfilled. That is, the first one is the initial offer shall not be less than 25% of the total outstanding units of REIT and the units being offered by way of the offer document if the post issue capital of REIT calculated at offer price is less than 1600 crore. Secondly, if the offer size is more than 1600 crore but less than 400 crore, then a minimum of value of at least rupees 400 crore is to be offered to public through initial offer. Then it is 10% if the initial offer is more than 4000 crore. These valuation is done based on the offer price and the units offered to sponsor, manager and related parties or associate to these parties of REIT is not counted while calculating the value of the offer. Listed, suppose in case now the REIT gets listed and the subscription from the public falls below 25%, then REIT is required to increase it to 3 within 3 years from the date of listing. Then subsequent issue could be made by way of follow-on offer, preferential allotment, qualified institutional placement, rights issue, bonus issues, offer for sale or any other mechanism and in the manner as may be specified by SEBI. So, the compulsion of public offer is when the REIT first time float a scheme for investment of a particular in a particular asset. Then the procedure for issue is REIT through the merchant banker shall file a draft of a document along with the prescribed fee with the designated stock exchange and SEBI not less than 30 working days before filing of a document with the designated stock exchange and SEBI. So, in both these both the place the draft of a document is first to be filed. As the same procedure is required for listing of a equity IPO offer. Now, the other condition that is at parity with the initial offer is the draft of a document should be made to the public for comment. This can be made available through website of SEBI, designated stock exchange or merchant banker for a period which should not be less than 21 days. The draft of a document, and suppose it has reached the stage of final offer document, then it shall be accompanied by due diligence certificate signed by the lead merchant banker. When the REIT files draft of a document, then SEBI can issue its observation and communicate the same, its comment to the lead merchant banker, which should be in the interest of investor, and SEBI may require the lead merchant banker to carry out such modification in the draft of a document as deems fit. Then lead bank manager shall ensure that all comments received from SEBI on the offer document are suitably taken into account prior to filing of the offer document with designated stock exchange. Now, what happens if no observation is received within 21 working days? Then REIT may file the offer document, final offer document with designated stock exchange or and SEBI. Now, how offer document is filed? The offer document shall be filed with designated stock exchange and SEBI not less than 5 working days before opening of the offer. Maximum time limit has been prescribed as 3 years. 1 year. 1 year. Yes. The initial offer or follow-on offer or right issue, whatever REIT is in the process of filing, shall be made by REIT within a period of not more than 1 year from the date of issuance of observation by SEBI. However, if the initial offer or follow-on offer or right issue is not made within the specified time period, a fresh offer document shall be filed. This fresh offer document will be filed in the same manner as we have discussed till now. Means again draft offer document, observation of SEBI, making it available to the public for comment, incorporating the comment and then filing. So that process will restart. It has to be completed again. Who may invest? The REIT may invite this for subscription and allot unit to any person. It can be a resident Indian or a foreign. For foreigner, it is required that its investment shall be subject to guidelines as may be specified by RBI and the government from time to time, as prevailing at the time of filing of the application. Application for subscription shall be accompanied by a statement containing the abridged version of offer document detailing the risk factors and summary of the terms of issue. Now, the aforesaid are the provision of issues. How allotment is done? Now, allotment could be done. Suppose we have received the oversubscription, then what happens? One more thing, that initial offer and follow-on offer shall not be open for subscription for a period of more than 30 days. So that offer will be available for public for a period of 30 days. Allotment procedure, if there is a oversubscription, then on proportionate basis as done for IPO and FPO, and similarly for as done for IPO and FPO, it is rounded off to the nearest integer subject to minimum subscription amount as prescribed and as specified in the offer document. What happens if allotment is not made, or what happens after the allotment? After allotment or refund, suppose REIT allots unit or refund application money wherever applicable, as the case may be, the refund is to be done and allotment is to be made within 12 working days from the date of closing of the issues. The price for the unit of REIT offered for public is decided based on book building process or any other process, circular guidelines, SEBI oblique RBI, and the manner as prescribed by SEBI from time to time. So the price is determined similar to the process of IPO. In case of refund, suppose we are not able to collect subscription amount and we fail to collect subscription amount, then REIT shall refund money to all applicants in case it fails to collect subscription amount of exceeding 90% of the fresh issue size as specified in the offer document. Then in second case, the REIT shall refund money to applicants to the extent of oversubscription in case the money received is in excess of extent of oversubscription as specified in the offer document. However, similar to the IPO, there has been right to retain subscription which cannot exceed 25% of the issue size. The offer document shall contain adequate disclosure towards the utilization of such oversubscription proceeds, if any, and such proceeds retained on account of oversubscription shall not be utilized for general purpose. The utilization of fund as per the offer document has to be ensured. Now what happens when the manager fails to allot unit and fails to comply the aforesaid provision? That is, either he fails to allot the unit of REIT, fails to allot fails in listing within the prescribed time frame in the designated stock exchange, or fails to refund the money within the stipulated time frame. Then in such cases, the manager shall pay interest at the to the unit holders at 15% per annum till such allotment, listing, refund, and such interest shall not be recovered in the form of fees or any other form payable to the manager by REIT. Similar to IPO, only amount not exceeding 10% could be utilized for the purpose of general purpose by REIT. What happens if suppose REIT get itself registered and fails to make initial offer? In such situation, if 3 years passes from the date of registration, REIT is required to surrender its registration certificate to SEBI and shall cease to operate. However, SEBI has been given an additional power in cases where it deems fit, may extend the period by another 1 year. Even after surrender of certification, REIT at a later date may reapply for registration if it so desires. There are provision of offer document and advertisements. The offer document of REIT shall contain material, true, correct, and adequate disclosure to enable the investor to make an informed decision. As far as the advertisement is concerned, any advertisement material relating to any issue of units of the REIT shall not be misleading and shall not contain anything extraneous to the contents of the offer document. If an advertisement contains positive highlights, it shall also contain risk factor with equal importance in all aspects, including print size. The advertisement shall be in accordance with the offer document and any circular or guidelines as may be specified by SEBI in this regard. So friends, today I am going to close this video with this, because already the video has taken more than 23 minutes. I am trying to keep videos short so that we can learn, we can recollect, we can remember whatever we have studied. Friends, hopefully this video would be helpful to you, and I have covered the study material provided by the institute so that you don't have to refer it back again. Some of the topics or the definition and some other things has been not touched by me, because I feel that those are not important from examination point of view. So hopefully you will find this video good for the purpose of preparation for the exam. Thank you. Enjoy and stay safe.